It's Wednesday, hump day. Things are kind of quiet. I'll give you some more updates, even though there's really not much there. Earnings, yeah, FDX trading in the red. We can cover some other earnings. Nothing super exciting. Cover an offering, an ASTS, ratings. Scott Devitt, 835. Wedbush Securities. Maybe talk a little short squeezes too. We know y'all love that. It's Wednesday, pre-market prep. Let's get going.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, right at yesterday's high, up 9 handles, 61.55 at a quarter. The buck showing a little bit of strength here after 2 bad days. Up 22 cents, 97.67. TLT down 16 cents, 87.24. USO in the lower 70s, just like that. Down a dime, 72.90. GLD, SLV flat on the day. Bitcoin finds support at that psychological 100K level, heading back towards 110, up $1,600 and 107,300. Good morning, Triple D. How are you doing on this Wednesday?
Not too bad. It's one of those Wednesdays where I'm tired. I went to bed early, but I'm still tired. Is this what it feels like when you're 80 years old, Joel? You know, just to be old, tired all the time.
Well, let's see. One of the two of us was in the pool at 5:50 this morning. Swam 2,800 meters with my buddy, who's actually going to be swimming across the Mackinac Bridge, which is 5.2 miles swim.
How do you swim across a bridge?
Well, under the bridge, Dennis. You ever heard of the Mackinac Bridge?
I know the Mackinac Bridge very well. Connects the UP to the rest of Michigan. I know how this works.
All right, headset update. Okay, I went out to Micro Center and I wasted my time once again. I got a headset way too complicated. My power went out twice trying to install it, so I'm using this temporary headset today, but I am making a 100% prediction unless I go on manual mute. It won't be because of the computer. But let's get the show on the road here, Dennis, and war updates. What do you have for war updates?
Not much really. Again, maybe I should have been ready with more.
Well, no. There isn't much. I'll give it to you.
Give it to us.
Trump says we seriously hurt their nuclear capabilities. The Pentagon's not so sure.
Yeah, they said only put them a few weeks back. I saw that yesterday.
Yeah.
So they think that this is going to be started up again, this nuclear program, and they're not going to keep it down. So that's something to consider. We are seeing the war stocks bounce a little bit here this morning. Lockheed Martin's up a little bit. NOC, they got beat up a bit. The war trade's on pause for now. We were doing the war trade all last week. It's pretty much on pause until further notice. Oil's down here slightly again. What a reversal, though. I mean, you know, you just can't think. I can't stop thinking about that Robinhood session where the ExxonMobil guy was buying up ExxonMobil's up 6% Sunday night, up to 121. I mean, that's one of the worst buys ever. It's now 108. 2 days later, now 3 days later. So just chasing, man. Chasing, especially on a Robinhood Sunday night session where nobody can short stocks. That's just a recipe for disaster. So if you learn anything from today's show, don't chase stocks on Robinhood. Not on the Sunday night session especially. With that being said, lots of
volume up there though, Dennis. I mean,
that's the thing. There's not that much fun. I was trying to short it, and I did get short some stock, but I wasn't getting those highs at 121. I had to go quite a bit lower to get some size on. That's the thing about the Robinhood sessions too. It's like odd lot central. It's like a little bit odd lots here, a little bit of odd lots there. There's not really these big size players. Certain stocks, like Tesla's always liquid. You can always get in at Tesla. But, you know, smaller names, like, you know, and not even smaller names, just most other names are just not a lot of, like, big players out there. So they might be trading, but it's a lot of odd lots and smaller size. So
Tommy Lackey in the house. Tommy Lackey in the house. Coming on the show on Friday. Thank you, Tommy. We always love your
Tommy.
input. Okay, I guess to stay on macro, I guess the tariff 90-day pause, July 9th, is this kind of
Yeah,
been swept
that's
under the
coming
tent?
up. I mean, there's reasons to be concerned for July. I've been saying all for the last 2 months. I've been saying I think we hit new all-time highs in June, and I think we could get a rug pull in July. I think the setup is still there for that. Like, and we are so close. How close are we to all-time highs here, Joel, and S&Ps? 50 handles?
A little bit more. Basis the front month rolling contract. You guys know what that is. We had a high at 62.8575. So that's about 130 handles. But that, for this purposes, I rather use the SPY, Dennis. I know you're happy about that. 613.23, 608. So 5.6 points away here in the SPY. So we're close, right back up here. You see that the monthly highs back there. Not a lot of daily highs here, as you could see from yesterday. Let's look at the triple Qs. Boy, I think they're there. Wow, triple Qs had almost a triple top here at 539, but got the 540.70 yesterday. So tech wins again.
One thing is obviously we've rallied substantially here, but what we're starting to see happen once again, we're starting to get some of these short squeezes coming in. And yesterday, some of these smaller names started squeezing. When you start seeing that, usually it's getting towards the end of the rally, but we're starting to see it happen. I'm not talking GME, but talking smaller stocks. The one big one everybody was talking about yesterday was BBAI, which is BigBear.ai. This was an AI darling. If you go back to, I got to go back to the monthlies, 2022, 2023. It's had some pops before, but BBAI had a huge pop yesterday. It was up 35%. Went from 4. It's continuing here this morning. One that we're long, Resolve AI, which I've been long in this one for a while, thinking the same thing that these small AI stocks just might get a pop. Not saying these are long-term investments here, but these are like potential to eventually pop. RZLV was also up about 30% yesterday. So you're starting to see some of these smaller stories, potential storied stocks get pops. Some of the short squeeze names, I always go to that list, highshortinterest.com. A lot of names on that list were starting to perk up a little bit. So I've actually started taking some positions in some of these high short interest names just for the next couple of days, thinking that, hey, maybe it spills over. We know Hertz had a hell of a day yesterday. HT Zebra, I believe, was up 17% in the last couple of days. Car was another one. Avis Budget Group moving yesterday as well. That might have been, with Uber news, and there was obviously the Tesla robotaxi, which we can get to in a second. But you're seeing some of these smaller names start to perk up. Some of these darlings from like 2021 start to perk up. SoundHound starting to look decent here on the charts, perking up a little bit here. SOUN. We've got news from QuantumScape QS, which we broke in the STN room last night. The Brentster broke that for us quickly there. The news on QuantumScape. I'm putting all these together because I think it's part of the same theme here. These small stocks, and again, sometimes some of these are penny stocks or $2-3 stocks, starting to show some life. The QuantumScape news last night was broke at 4:30. They said they achieved a major milestone. Cobra separator process enters baseline production. Scale up of this Cobra separator process, which I know nothing about that. But again, this was a headline that came from the company. Brent said those headlines can sometimes be a bit promotional in nature, meaning, they're trying to get some good news out on their stock. Well, it's working. Stock is up 38% here this morning. It's one of the big winners of the day. It's also like a 13 or 14% short interest in here too. So just be careful. You short these stocks, with these smaller stocks with higher short interest. These things are a little squeezy going on. So we got a little bit of squeeze happening in a lot of names here. So I go to that list, highshortinterest.com. Those ones as well can move. So be careful here. We'll let you do some technicals here on QS, Joel, because that's the big mover of the day.
Yeah, first things first, you want to look at that pre-market high, right? At 5 a.m, they took it to 617, currently trading 604. Oh, no, wait, you got another pop. I stand corrected. 627, trying to hold a $6 bid. as always with these kind of things, you want to see strong follow through that pre-market high. I also note here that the volume just started to pick up yesterday from 7.5 million to 22 million. So, another day already traded 11 million. So this is going to be a big volume day. So you don't want to get too happy on the shorter exit side until maybe it starts to consolidate a little bit. But first things first, keeping an eye on that pre-market high 627. This is way up here in the chart. So if you're a gap fill trader, right at this gap right here, folks. This is where you're at right now. So if you got stuck holding the bag on this one, on this gap down day, boom, that's where we're at. So see what the bulls can do if they get into this bar right here, which at a high is 694. Sell it on the way up. Don't get caught in halts. That is investment advice.
And a lot of these things don't halt, so the halts are wider on the smaller cap stocks as well. So not so concerned about the halts, but just, again, a lot of these stocks are not investable material, but they're tradable material. So they're starting to move. Tommy Lackey in the chat here this morning. Welcome, Tommy. QSI, he was saying on this one, Quantum SI, I do not know this stock, but again, starting to perk up. $1.88 yesterday, had a pretty good day yesterday, up another 9% here today. So we're seeing some squeezy stocks, and this stuff happens when you're getting to all-time highs, where money just starts flying into everything. The Kramer effect is back here too, Joel. Kramer last night, talking a few stocks, but he was pumping C8 Chime, which is obviously 1, 2, 3, 4, 5, 6, 7, 8 days in only. And you're getting into a retail-driven market because Kramer will go through periods where nobody cares what Kramer's saying. And then it goes into periods when the market's really hot where Kramer likes that. Let's go buy that stock right away. And last night he said to a caller, I'd buy Chime right now, CHYM. Well, Chime was trading 29 when he said that. It popped to 29.60 in like a minute. And if you're wondering why Chime is up 2.76%, that is the Kramer effect, folks. Is there follow through here? There may be. So keep that in mind on CHYM. I mean, here's an IPO that has underperformed. All the IPOs have been really hot. Well, this stock, I would lean on the low of the move. I'm saying if I were playing it this way and I'm not in the stock, if I was playing it this way, I'd say 28.21. That would be my stop out. If you're buying it here thinking there may be follow through from the Kramer effect, that's where I'd stop myself out. So you're risking yourself $1.50. And those IPOs can turn around sometimes too. But again, when you get media, or personalities on CNBC talking stocks, sometimes those moves are temporary. So you got to be careful on that. Also, Kramer said to take profits in Circle and CoreWeave. Circle tanked on when he said that. It was like 223.5. The stock went down to 213 last night, so it's down substantially. I don't know where it was at 4 a.m. if it was down more, but it's come back. I mean, the buy the dippers reemerge. They can't help themselves. The other one, CHYM, CoreWeave. I tried to short that one actually, CoreWeave, and then I looked and I was like, oh my gosh, the borrow on IB was 125%, and I'm like, I'm not bringing that overnight, paying 125% a year. So if you just annualize that down to the day, works out to about 59 cents a day at the closing price. So basically, every day you take that overnight, you pay 59 cents a share. So if you got 100 shares, $59. I mean, just to short it. So obviously now today it's up even more. So I'm glad I covered it. And the Circle rebound has helped it too. But CoreWeave was starting to leak a little bit off Circle last night. These things tend to move together, even though the businesses have nothing to do with each other. They've both been two really hot IPOs. And if Circle really starts to roll over, I would expect it takes CoreWeave with it. But Circle has rebounded here this morning, which is why CoreWeave continues to rebound as well.
Okay, so we have some bullish talk and we have some bearish talk out of Kramer. For the CHYM, I just looked up what this company actually does. And American financial company that provides fee-free mobile banking services through 2 national banks, Stride Bank and Bancorp Bank. So I don't know. I'm not sure about the fundamentals on this one. You did get the Kramer pop. The lowest high it ever made was 30.05. So let's see, people get excited about this. Establish a 30 bid. You can, I don't know if it's too early to figure a retracement here from 44 to 29, but not much as far as resistance. You get over 30. Circle, we had Ari in the STN room stalking this for short yesterday. I don't know if he listens to PMP2. And we were talking about it early, and these stocks, once they get into these stratospheres, really hard. Like what did you want to lean on 298.99 yesterday, the all-time high for a short? Well, that would have been tough. But what you look at when you don't have this much price action, I mentioned that all-time closing high at 263.45. It snuck over that momentarily when it got to 265. So when a stock's been out, 10, 12, 15 days, has this kind of move, the big boys are not necessarily looking at that 300. I got to get out at 300. They're looking at the best mark on their sheets. So now you're a ways away from that. I don't know if you can figure a retracement, but under today's low, 217. Wow, you're a little bit of ways from that. But keep an eye if we break Tuesday's low. Core Weave, I like to call it Crime Wave because that's how I remember the symbol. You got some highs forming. Looks like someone's trying to wiggle out at 185. You're $9 away. Old time closing high 183.58. Closing high. What's interesting about this one is your high on Monday 83.53. Your high on Tuesday 83.96. So there's the Kramer stocks. We haven't done 3 Kramer stocks in a long time, but that's the info for those folks if you're out there trading it today.
Jumping in here real quick, folks, watching some price action in Palantir right now, up about 30 cents over the last couple minutes. Looking around at other defense names, not really moving. General Dynamics just saw a little blip there. We are getting a headline, NATO commenting on their defense spending, reaffirming commitment to collective defense. NATO allies agree on new defense spending target of 5% of GDP. Not totally sure if that's moving Palantir, but those headlines and the price action in Palantir kind of correlated. Palantir, a little resistance at 144 there. It could have just been breaking out over that, but wanted to break in and just drop that in front of y'all.
I mean, Palantir just consolidating up near the highs, and it's hard to say that this stock isn't likely going higher. Like, I feel like it wants to go to 150. Maybe that's the next logical stopping point. It looks like it's consolidating to go higher to me. I don't know what Joel says, but with the technicals, but I like the
I'm not going to argue with you, Dennis. It's been an uptrend. It's consolidating. It's been an uptrend, consolidating to move higher. You got 3-4 lows in the same area. I mean, 144.86 is your all-time high. We'll go Kenny Glick on you. 145 brings you 150, right? When there's nothing up there, there's nothing up there. Just a little bit more, tamer of a stock, I guess. I'm looking at it, only had a 6-7 point range yesterday. Trades good volume, Dennis. This one must be, does this have good after hours volume too?
Palantir? Oh, yeah. You can get Palantir and Tesla are probably the most 2 liquid stocks on Robinhood on the overnight session that you can get. You can get out of those things within a nickel almost always. Those things are super liquid. So Tesla, obviously, which we can go to next because there's news all over that too. There's always news on Tesla. We get the European sales data coming out. Goes down again. This is last night. I believe the European sales were down 27.9% in May from the year over year. So year over year sales continue to decline here with Tesla, which is just a mess over in Europe. It's pretty much a mess everywhere, the car sales, but people aren't looking at it as a car company anymore. Baird reiterates their Tesla at neutral. They see deliveries below consensus estimates of 392,000. They're seeing around 377,000. They think the numbers are going to come lower yet for Tesla. The declining sales, not declining growth, declining sales altogether here. Doesn't matter, though, because the stock has got a sexy story. And the story, how do you get sexier than self-driving cars and humanoids? So that's what continues to drive this story. It pulled back yesterday. I think there was concerns over, we talked about the headline from, I always get this acronym wrong, but like the NGTHA, I think it was, which is like the National Highway Safety Association. They were investigating Tesla's robotaxi to make sure that the cars were safe. the stock was pulling back on that. We haven't heard anything more from that. The stock's rebounding a little bit here this morning, but the robo-taxi I wasn't overly impressed with. Like I said, the person's sitting there, safety driver. They've got, the thing basically like Waymo geo-fenced and stuff, so it wasn't like blowing me away. And I'm also concerned that I'm one car did go in the wrong lane. Like, I'm concerned that it's maybe not quite road ready. And if they launch it too soon and if it has an accident, that would be a big issue. But with all that being said, you can't argue with like what they've accomplished. Because cars driving themselves is really cool. Humanoids coming is really cool. That story is going to continue to drive this stock for a long time. So obviously, long term, it seems like dips keep getting bought on this name.
I'll go a little fundamental on you here, Dennis, and with the robo taxis, and I would say, it's definitely unbelievable technology and implementation. I mean, do you think you'll ever use a robo taxi?
Yeah, 100%. I think robotaxi is going to be awesome. I love the idea of like not having somebody else in the car. That's why I don't like the safety driver up there, because it doesn't feel like the same experience as a Waymo where you actually have somebody over in that seat. But eventually, hopefully, they lose the safety driver, and these things can get and be everywhere. I think 5 years from now, we're all driving driverless cars. I think it's going to be awesome. I think the future is going to be so cool, like what Musk has said. So that's why I remain with the core position in Tesla. And again, it's not like it was last year where it was 10% of my long-term portfolio. It's about 2% of my long-term portfolio now. But I remain in it, and I don't want to sell all the shares because I think there's a long-term story here. It's hard for me to buy it when I keep seeing the data come out so bad.
Yeah.
But I mean, they don't seem to care. So, stocks rallying on bad news is one of the best signs you can get. And there just continues to be bad headlines coming from this. But stock continues to go higher. So hard to be bearish here. I know people think I hate Tesla. I'm long it. I don't hate Tesla at all. I'm just, they're reporting the sales and thinking, holy man, like that's impressive how bad the sales are.
Yeah, I think about, when the reason I was asking you, I just think about it like geographically, the area, that you're in, that you live in, like the availability they're going to have. I mean, I could definitely see, the big cities, and the moderate sized cities and stuff. But a lot of our country is like rural, right? Or suburban.
So this is such a great point you're making here, Joel. And this is why Waymo is probably just going to be a big city thing, because you can't geofence the whole it'd take a lot of money to geofence the whole entire USA and all of Canada. But that's why Tesla's trying to solve it in a different way. And I gave this argument a year ago when I was bullish Tesla, and I said to buy it on $180. That my argument was that Tesla's trying to solve this in a way that the cars can go everywhere. They're trying to solve it visually so they don't need geofence. They are not there yet. They are geofenced in Austin. They have a safety driver. They are not there yet. Are they there 5 years from now? I think so. I think these cars can go anywhere 5 years from now. And that's why Tesla's long-term solution is a better solution than Waymo's. And that's why Tesla's very scalable. So that's the long-term story here, is as it gets more data, as the cars get better, as AI takes over, those cars will be able to go into rural communities. Those cars will be able to take you on a long road trip across the country. They will be able to go into climates eventually that aren't that nice, where, you've got obviously, you're going into cities that are southern because, winter roads and stuff. So I do think that Tesla is thinking about all those things long-term. And I think that's the long-term viable solution. I don't think Waymo is the long-term viable solution, and it's a lot more costly. The way they're doing it right now, the average Waymo vehicle is $170,000. I mean, you got Teslas on the road for $40,000. So if you can figure out how those things can just drive themselves and just with software or update, they're way cheaper. They can undercut everyone. So I think long-term, 5 years from now, I said it yesterday. I think I want it to 10 years from now, because I was like, I don't know if 5 years is long enough. 10 years from now, I think Tesla's the most valuable company in the world. I just don't know the path to get there, and I think there's going to be a lot of hiccups along the way. So I remain fully bullish Tesla long-term.
Okay. All right. That's a good explanation or good talk on the thesis there. You know what? It's 8:25. You want to do some earnings?
Yeah, we can jump into it. I mean, the one, and I have it in my long-term portfolio, we'll start with AV. I know people want to start with FedEx, but FedEx just seems like it's not as important in the economy as it was 5 years ago. Obviously because Amazon delivering their own packages, and FedEx just has not been in decline for a while. AeroVironment was very interesting here, though, their earnings report, because they hammered the stock. We said in the STN, this is a really high bar, because the stock had been running and running and running. I have it in the long-term portfolio, but in the last 2 months, the stock has doubled. It's basically went from 100 to 200. So bar, huge, enormous bar. $1.61 versus $1.42, 275 million versus 242 million. And that was good. The EPS guidance was light for 2026, and also their sales guidance was not great either. So they hammered the stock on this initial guidance. The guidance did not look great. They hammered the stock all the way down. Joel, under $170. How low did we get?
I was just looking at 170.70. 170.70. And you know what? You had a pair of lows stalking that area, almost smack dab in the middle, 71.98 and 70.31. Holy mackerel. I can't believe they knocked it down to 170.
And slowly started to come back. Not even slow, quickly came back. Was hanging out around 185, 186 for like 2 hours. And then you know what the catalyst was to bring it back positive? Guess. No idea. I know what the catalyst was because I was watching it live and I actually did buy some. I sold too soon though.
Kramer?
Yep. He had the CEO on and he said they got this all wrong and I'd buy the stock. The stock was 187 when he said that. The stock went to 195 about 10 minutes later and it's just continued here. The Kramer effect is fully back here right now. He's hot right now. And the reason, again, this is the type of market we're in. You got to understand your landscape. When you're in bear markets, nobody's watching Kramer. Nobody wants to look at the portfolio. They don't want to see the stocks down. When you're in bull markets, people are hungry. What can I make money on? What can I make money on? Let's see what Jim's saying. Oh, yeah, that's
quick money. Quick money. Quick
money. Quick money. He said buy it, and the market listened. And that is the reason that AVAV has come fully back. Not the initial. Went down to 170 and bounced to 185. But the 185 to 202 move is a Kramer effect here. So Kramer effect is back. And we have to respect that. Now, again, market starts to roll over. We get into tougher times. Kramer effect will go away. But we know in 2020, remember COVID times, Kramer was moving stocks 20%. It got ridiculous. I've never seen a Kramer effect like that. It's always existed, but I've never seen it that strong. It's not even close to where that is, but it's starting to pick back up because the last 2 months ago, there was no Kramer effect whatsoever, almost an anti-Kramer effect. And now you obviously see, where he's saying something and the market's listening. So keep that in mind. If you're trading here, we have no data at 8:30. Thanks, Brent. Just checking that because I don't want to be caught off guard. But that was the catalyst here as well to drive it back up. So AVAV, I remain long in the long-term account. This is one of the coolest companies out there. Obviously, the drone warfare, the stuff they can do is just unbelievably amazing. I know the valuation is high. It's like 80 times earnings, but it's been a good one. I sold some stock. Wish I would have not sold any stock.
I'll just say, what a rebound. 33 points off the pre-market low. This is just an area, and we're pretty close to it right now. You had 1, 2, 3, 4, 5, 6 tops, let's just call it between 200 and 205. 6 tops back at the end of November, kind of it looks like potential resistance to me. If you have targets in that area, you might want to look at it, especially, I don't even know what the expected move was there. But boy, oh boy, that's just based on the dailies. So you have targets up here, 203, 205, when you weren't feeling really good when it traded down to 102.25 back in April. Almost a double since then. So that's what we're taking a look at in AV.
And I just want to clarify here on the Kramer effect. I'm not saying Kramer is making good calls. No. We got to define the Kramer effect here because Jay's saying he liked Hood or hated Hood and it's went straight up. Kramer honestly does not make great calls. Sorry, CNBC. Sorry, Kramer. It's not about that. I'm saying the Kramer effect is that a stock starts moving when he mentions it. That's the Kramer effect. Not that he makes good calls. Not saying that whatsoever. What the Kramer effect, again, is that he has influence on the stock where he says something and the stock responds instantly. So we're talking the day trader effect of the Kramer effect. So where we saw clearly last night, the evidence is there. He said, I'd take profits in Circle right now. I watched Circle fall $10. He said it with CoreWeave too. It went down a little bit, but not nearly as much, probably because that borrow was so much money. He said the Chime last night, just recapping it, it went up instantly. The algos are now programming back into Kramer here again. This did not exist 2 months ago. He was like ice cold. Even the Kramer effect was dead. But Kramer effect has cycled. I've traded this for 25 years. It cycles up and down and up and down. When you had a hot retail market, Kramer's got a lot of influence. The hottest one ever was 2020, at the end there in 2021, where he was just mentioned the stock go up 20%. So yeah. So that's, what I'm trying to just clarify. So I'm not saying, oh yeah, Kramer says something, we better go buy what he's saying. It's short-term trading, not long-term trading. So the Kramer effect is for day trading, not for long-term investing, because we know Kramer long-term is a momentum trader. Kramer long-term has always been a momentum trader. So he's going to make good calls in momentum markets, and he's going to be doing really crappy when it's not momentum markets. How do we know that? You can predict. If the chart's going up, he's always bullish. The chart's going down, he's almost always bearish. It's just the way it works. So he's a Momo trader, a pure Momo trader.
Breaking in here with a little news on Oklo. Enters a strategic collaboration with Hexium and Terra Power to launch a new pathway for its high-assay, low-enriched uranium stock. Moved about, 20, 30 cents here. Not the most exciting news, but obviously a hot stock. Thought I'd pop in and give you guys a heads up.
Yeah, give us notice on those hot stocks, because this nuclear trade is not going away here. I mean, SMR is right back near the highs of the move. NNE did the offering, down for a couple weeks after the offering, right back up here again. Oklo, same story, has pulled back recently. I mean, I don't know, from valuation perspective, these things are crazy. But again, in stories, hot valuation doesn't matter at all. That continues to be the case in Oklo. It's up here right now. It's bounced from $52 yesterday. So this has been a huge bounce here in 2 days. But these Momo names just continue to outperform.
Okay, you guys take it for 1 second here. I got to help our guest out.
Okay, sure.
Okay, sure.
Couple other stocks that were on the radar. FedEx, which we'll just cover those earnings really quickly here. It initially popped, then it dropped, then it popped, then it dropped, and then it dropped. I mean, I'm not joking. It yo-yoed around where it didn't know where it wanted to go. At one point in time, the spread was 12 points wide because they cleared the book out 3 times. But then it started to go down. So the initial numbers were good. 607 versus 587, and 22.2 billion versus 21.8 billion. So beat on the top, beat on the bottom. The guidance was light. Initially, we thought that they didn't even give guidance, but they ended up giving guidance on the call. And it was $3.40 to $4, and estimates were way up at $4.15. This is for Q1. So the company still makes a lot of money. Don't kid yourself. It's a value trade, but it's been a value trap. But when you're lower in guidance and you're already kind of been in the gutter here, and we know it's been in the gutter. It was $300 back, 6 months ago or 7 months ago. It's $218 now. Story doesn't have any momentum. The story is ice cold. Lots of reasons to not think FedEx is just going to rip back. I think these are not the dips you're looking for. It's not the definition of a Momo trade. And when you're lowering guidance, I hate them when they're lowering guidance. So and again, so I like pullbacks when they're not lowering guidance. Brent, so you're going to say
Dennis,
something?
Yeah, we had a lot of questions in STN yesterday on what other stocks does FedEx move. Obviously, UPS is your peer, but I was kind of saying this correlation is there, but it's just so soft nowadays. I think maybe people just don't really care about FedEx and UPS anymore.
I think you're correct.
Yeah,
I think you're correct. A lot of people are in UPS for the dividend now. It's 6.58%. They're just like, oh, it's the pure value trade, which it is. I mean, UPS. There's been no story that's been worse than UPS, and I've been arguing it for a while. I mean, this is old school. We gave this disruptive, conversation, yesterday, where we're talking about disruptive technologies and industries that are being disrupted. And I gave a bunch of stocks that are definitely being disrupted. And, with Google being one of them, I talked about MasterCard and Visa. I think this might have been the STN room I was giving this. But, just stocks, specific stocks that are being disrupted. I do believe Uber and Lyft are going to be disrupted eventually, too, by driverless cars. I mean, this has been going on for a while. UPS and FedEx are totally being disrupted. What really killed them was when they lost the Amazon contracts. They're delivering very few, and I don't know if they're delivering any Amazon packages anymore. But I mean, it's the old way of delivering. There's going to be drone delivery. There's going to be, I think Tesla's going to be a big delivery. With the Tesla trucks coming in and eventually driverless and having humanoids, I think Tesla's going to disrupt this industry too. So just think like, yeah, there's a value here, but I think they're value traps. So I don't think this UPS is like, oh, this is the sexy story where, you know, this is going to be the cool story for 2026. I don't see a path where this becomes a cool story again, unless they start to get into drone delivery or something completely different. The old way of delivering stuff is going to be gone 5 years from now. So these industries are being fully disrupted, and it's starting now.
All right, bringing to the stage Scott Devitt, equity analyst over there at Wedbush Securities, covering the e-commerce and internet sector. Scott doing some quick work on the computer to join us this morning. Thank you very much. How you doing today?
Good. How are you?
We're doing good here. Just watching the market float up to all-time highs here. Give us your broad, before we get to individual stocks and sectors, just, give us just your broad macro outlook, which seems to be changing on a daily basis.
Yeah, it's been quite a move in the last 3 months, right? From heading towards Armageddon to back to a smooth and growing economy, based on this kind of changing political and macro backdrop. And I think, in my view, I have a lot of companies that I think are doing well. I also think that we're kind of bouncing up against boundaries in terms of valuation for consumer companies, particularly. Your last segment talked a bit about disruption. There's a lot of it happening in my names. I cover a lot of the companies that were mentioned as being affected. And so that's a factor too. But, I'm pretty net neutral right now, just because I think sentiment is extremely strong and stocks are fully valued.
Talk about that. So
Yeah.
So stocks fully valued. Like, how are you just comparing like valuations historically here, or how do you come up with stocks being fully valued? I kind of agree, but just curious how you come up with it.
Well, I look at companies, so like Amazon and Alphabet, and we can discuss the disruption that Alphabet faces, but I think that for the growth that you get out of those businesses, that they're pretty fairly valued and even offer opportunity. So, and that's a significant component of the market cap, of consumer tech. But when you look at pockets, like say consumer online travel, valuations are at elevated levels. And the highest they've been in some years. We've had a kind of cyclical upturn in travel post-pandemic that's lasted 5 years now. So like, what's going to happen next in travel? It's going to be determined by, do people still have jobs 12 months from now, and access to capital? If so, they'll continue to travel. But it's a much harder bet to make on companies like, even Booking, which we have an outperform on, Airbnb, and Expedia. And I think that's the proper ranking, but that is a subsegment of consumer technology and internet, is a little less appealing. You mentioned, Uber and Lyft. I think that with an open mind and a longer time horizon, that a business like Uber may be screwed, and the market's pricing Uber in as if there's nothing going on underneath the surface. Just because there are a couple malfunctions in a test that's like generationally changing, if it actually works over time, in terms of referring to Tesla's Austin test. And it's inevitable that we're moving in the direction of autonomous vehicles between Waymo, others, and Tesla. And over many years, that's going to become problematic for something like Uber. And yet it's trading also, at I wouldn't say it's a elevated valuation relative to history, because there were points in time when it wasn't making any money up until the last few years. But when you look at it on any other, multiple, since it's been an earner and relative to expectations, it's an elevated valuation. So I say it generally, at full valuations. I think there's pockets of opportunity, but I'm just a little less interested in these names now than maybe I've been in the recent past.
Yeah, I mean, you look at, there is disruption happening everywhere here. And, maybe going to Google here too, because this is currently being disrupted. I mean, 55% of their revenue comes from search. which, scares me, because I was a Google investor for a very long time. I was actually at Google in my long-term portfolio for the better part of a decade. And I took the profits last year when ChatGPT came out because I'm like, I think this is a game changer for them, because ChatGPT comes out and sure, Google has their own, obviously AI bots, with coming in and trying to compete there. But I mean, this has been such a cash cow for them so long. I find my wife and just look at her, and she doesn't use Google at all anymore. She uses ChatGPT for everything. So I just think there's competition coming to eat that search pie. And this, and Google has a lot of other things, and Google's very smart, so they might figure out other ways to make money, because they obviously got Waymo, they've got, cell phones, they've got all kinds of other things as well. So, this might be a stock that will find its way. But what are your thoughts here just on search being disrupted and so much of the revenue still coming from search?
It's definitely a problem that's affected the stock, that's why I trade to 17 times earnings.
Yep.
But to your point, like if it were, to be really structurally damaging, 17 times earnings wouldn't be cheap, because the earnings stream would be eroded over time. But our position on it is that, it's not a from a defending standpoint, it's not easy to do, because you're dealing with news flow that's running counter, to a call literally every day, right? Because all the news is favorable to other AI type platforms that are just emerging. But I think Alphabet, sits in a position, particularly Google Search, where they can continue to grow that business so that the overall entity can grow at or near double digits, and with some operating margin leverage that they have, because they're historically so fat in terms of the way that they run the business from a labor standpoint, that they can grow operating profits, low to mid double digits, and at a 4-turn discount to the S&P 500, that's a reasonable investment. So I come away more constructive on it, because I think a lot of what you're describing is now well understood and priced in. Maybe when you made that decision to sell, and it was less kind of infused into the name and into the narrative, that was a better time to be a net seller, and we've recommended it throughout, so we missed that opportunity. When I sit and look at it today, I think the stock can do better than the S&P 500, from current levels, because they can manage through that. Even last quarter, the search business grew 10%, even as this is happening. So we'll have to monitor that to see if they can keep growing query volume and keep growing the search business. If they can, from 17 times, it's a long, and if they can't, there's a problem.
Scott, more of a broad question here. We talked to a lot of Wall Street analysts, different sectors, macro, and a lot of them, no matter what the market circumstances are, they're bullish. They're bullish, and you don't hear, your statement fairly valued or overvalued to some extent. I mean, you deal with some larger retail investors, you deal with institutional investors, and they're looking to buy. They just want to buy here. Like, how are those conversations going? I mean, rip roaring market off the April low and everything. Pushback, or people agree, or what's the market sentiment out there for the institutions?
Well, it's smarter to be optimistic, given that markets go up 8 out of 10 years, 80% of the time or something like that, right? So that's the right approach, I think, over the long run. But when you go through, this kind of tumultuous period that we've had. We had a bad year in 22, very bad for companies that I cover, because they were digesting the pandemic. And then 23 and 24 were very strong. And then it was anticipated that we had the most, pro-business president entering the White House, and then stocks collapsed for a month. And so here we sit, kind of back where we were, at the S&P north of 6,000. And so there's that dynamic of looking at, there's been a lot of good in recent years. And then when I look at it within, with a microscope within the companies that I cover, there's pockets of opportunity, but broadly speaking, everything doesn't seem like an opportunity. Sentiment tends to follow stock price performance, so investors are pretty optimistic at the moment, but it doesn't take much, to change that a little bit. And that's why I think it's probably more appropriate to be a little bit cautious up here. It doesn't mean stocks can't keep running, but to be a little bit more cautious because there's just not obvious opportunity, relative to history or relative to what we've seen in the last 3 months when there was tremendous opportunity during that, that short period of disruption. And then extending, and I'd love to get to the conversation of, talking more about the rideshare industry and Uber and Lyft, because I think that's a hot topic, right now. So happy to touch on that now.
Go ahead. Uber, what a great day yesterday, and Lyft got an upgrade. Yeah, I'd love to hear your take on those stocks.
Yeah, so there's, you have a very long duration technology shift that's happening that faces different levels of skepticism among investors, which is, from human driven vehicles to autonomous vehicles. And it's happening right now, and even the leader in the category in Waymo has latched itself onto what I call autonomous on training wheels, which is what Uber offers. If you lack distribution and density, you attach yourself to Uber because they can provide that while you scale up, and then down the road, if it actually works, you don't need them anymore. So and that's exactly what Waymo's doing, which is emboldened investors that are bullish on Uber even more to think that Uber is going to be fine in the long run. The reality, as I see it, is that autonomous actually does work in scales, whether it's Waymo or more damaging if it's Tesla, that as that develops over time, Uber as a distribution source becomes less valuable. Supply becomes more concentrated. Waymo needs Uber less. Tesla doesn't need Uber at all. And let's even under a scenario say that they do need Uber. Why would they go to Uber versus partnering with Lyft in the US, or even acquiring Lyft if they needed distribution so bad? So there's so many scenarios that could play out that are damaging to Uber. And here Uber sits at, at 92, which is kind of the highest level that it's been since this controversy emerged. And the last thing that I'd say on the topic is it's not about, autonomous vehicles being everywhere. It's about them being in the most densely populated markets, which is the ones that where autonomous operates or tests or has been discussed, like New York City of operating. That accounts for like 28% of Uber's rides. If you include other large density cities that haven't been announced yet, it's almost 40% of the rides. So if autonomous can become prominent in those high density markets over time, that's going to be what starts to disrupt, Uber's business model. And I think we're within a few years of that starting to happen. And then it's getting, lost in the conversation because it's really A or B. The way hedge funds position is Tesla's Austin launch. Is it good or bad? It depends on who you're listening to on any given day. And it toggles the stock up and down 10%. So it's a longer term perspective relative to the day by day, but I think it's the next category of internet that's going to be meaningfully disrupted.
Scott, I can't agree more. And I was saying yesterday, I've been giving this argument on the show for a while, is that Tesla is going to disrupt a lot of industries here. And rideshare obviously is the main issue for Uber. And I don't know, the one thing I've been arguing here is this market is so short term. It's so focused on the short term. It's full of high frequency traders that drive price on headlines, and every headline just, drives price. And this market has a huge difficulty in looking out 2, 3, 5 years. It just doesn't do it. I mean, there was always this theory that the market prices out 9 months ahead, and I think, I took it in school back in 1995 when I was taking finance, and they would teach you that the market is always looking out 9 to 12 months. I think that was maybe true back in 1995. I think it is totally not true today because the market is driven on short-term performance. Where can I make money now? Fast money. Even CNBC was always investments. And now they're all going to trading shows. And even us, we're a trading show as well. But the market's so focused on short-term that it doesn't see the big picture. I completely agree with you on the big picture here. The big picture for Uber and Lyft are really murky. Unless they can figure out their own autonomy, I got to think you're coming in with driverless cars. And Tesla, we could say, they could buy Lyft or maybe they partner with Uber. It's not Musk's style to partner with anyone. He comes in and he likes to do things. And if he actually figures this out, if they actually get there in 3 to 5 years where these cars are fully autonomous, I can't see how a Lyft even survives. So unless they reinvent themselves. So it's tough, man. What are your thoughts just on this whole short-termism of the market?
I agree with you 100%. I mean, we probably were schooled around the same time, and you've gone from 9 to 12 months of discounting to probably 9 to 12 days during the duration that we've been in the work world. So you know, the opportunity there are certain types of firms that are optimized for that type of environment and can make a lot of money. I think as a fundamental type of investor, which is the way that I was kind of groomed, that the opportunity is in what I call like duration arbitrage, because there's a time period now that the market doesn't even look at. You have stocks that I cover or pay attention to that are multi-trillion-dollar companies that trade in ranges of 50% in 12-month period. And you ask yourself, how in the hell is it possible that multi-trillion-dollar companies could trade in that wide ranges if we're supposed to be so smart and sophisticated? Those are supposed to be the most well-researched companies, and yet they get opportunities created because all anybody cares about is the next YIPIT data point, or the next quarter, or the next day, and what the next week is going to be. So I think the opportunity for those few of us that are still more fundamentally positioned and longer term oriented is in that duration capture and finding these mispricings that are created because of trading activity versus reality. And I put, you know, front and center this kind of rideshare, you know, situation today as the topic, you know, that is very interesting to look at in that regard.
Okay, we've been on the line with Scott Devitt, covering internet commerce, travel stocks, giving us a good, solid fundamental view. Scott, always appreciate having you on, and we'll be talking to you again real soon. Have a great day.
Thanks, guys.
Thanks, Scott.
8:53, Pumping Powell at 10 a.m. I wouldn't expect too much different than you heard.
Is he talking again?
Yeah.
He talked 10 a.m. yesterday. What does he talk, every day?
Well, there's a testimony happening on Capitol Hill, so you know that those testimonies can be a few days. 10 a.m. also again today.
Okay.
Probably not going to be too much different. Also, we do have Trump that is going to be coming to the podium here at the NATO summit probably pretty shortly. I got eyes on him, but I don't know exactly what we're expecting out of Trump. Just a couple little sort of programming notes for you guys and gals.
I mean, Powell was talking all day, so you're going to say nothing different today. Nothing changed in one day. So I don't think Powell's going to move the markets at all with what he says here today, because nothing was changed yesterday. I mean, he was hawkish yesterday. I watched a lot of it. If the market cared about bearishness, they would have sold it off yesterday, because he was not talking about imminently lowering rates in July. He was talking about the uncertainty of tariffs. He was talking about, and they were fighting with him. They wanted him to say to lower rates. He was not giving in. He stood firm. It doesn't matter to this market right now, because the market does not give a crap about any bearish story whatsoever. This market wants all-time highs. It needs all-time highs. I don't think it's going to be denied. So, you know, I've been calling it for the last 10% here up on the S&P that we're going to see new all-time highs in June. got skeptical when the war happened. I think we're going to get it. I mean, we only have 1, 2, 3 trading days left. I think we can get it. The Russell rebalance comes Friday. I think we can kiss all-time highs, and then, you know, we'll see what happens. I do think in, you know, longer terms, tariffs are going to be an issue, but right now the bulls remain in complete control. I'm looking at my trading portfolio. It's full of speculative crap. And what I mean by speculative crap is all these little dogs that start barking. I kind of throw up looking at the stocks that I own right now, thinking like, wow, you know, I own a lot of junky companies, but the junky companies, the dogs are barking right now. That kind of stuff is moving here. So, you know, think about what was hot in 2020, 2021. That's what's getting hot here again. The stock's been left for dead, and they are still all dogs, and I would not invest in any of those things. But short term, like we were going through that short squeeze list and looking at all those names, those are the kind of stocks that are getting bought here right now, because the market's just looking for, like, what's the next high flyer? Where can I make the money so fast? I need to make 40% tomorrow. Where can I make my money? That's where the market's at right now. Full speculation running rampant.
Just for going back to Powell, the Fed funds tool, Market Watch, still at just a little over 20% for a July rate cut. So following that along, what about Coinbase And Bernstein does not want to be outdone by anybody on the street. They maintain an outperform, raise price target to 510. Coinbase in rocket ship mode. Next monthly high coming in at we're above that monthly high, 349.75. Your next monthly high, 368.90. Why the hell not?
Why the hell not is what it is. That's the best way we can put this market. The name of the show could have been Why the Hell Not? Because you can have whatever bad news in the stocks just go up. I mean, this Coinbase move is nothing short of astounding. This is a stock that moved, had a huge move up 100 points in April and May. In 2 months, it went up 100 points. It was like, what a huge move. The last 4 days went up another 120. Just like 110. Just give that perspective here. This is now getting to upside capitulation on some of these names. And there will be a rug pull. I do see the old all-time high. We just kissed that. No, actually, sorry, we're not. 429 was the old all-time high when the stock came IPO, and it never saw it ever again after that. Are we going to see it again? Probably. Why not? Why the hell not, Joel? Why the hell not? That's where we're at. That's this market. Why the hell not?
Okay. So any other
Johan says everything is awesome, no bad news ever again. There's all kinds of bad news. The market just doesn't give a crap about bad news. So we have a war, we'll buy the stocks. The war is over. Let's really buy the stocks now. I mean, we don't go down on bad news and we go up on good news. I mean, that is a bull market, folks. This market is just full rampant. They're going to find a way on the tariffs because maybe the taco thing happens. He just kicks the can down the road. Scenario analysis. July. We get to July 9th. We're like, well, we're uncertain. We're going to kick the can down the road another 90 days. The market rips 3-4% on that news. Another scenario. If you think that Trump's going to put in the tariffs and he's going to come with the big board again, then that's a different story. But I don't know. I think we could. I've been saying new all-time highs in June and the rug pull in July. But I'm scared of the rug pull call right now. So I'm just playing full on bull. We'll see if we get, some, tariff stuff or whatever. We got to be ready to sell stuff and go short. But at this point in time, if you're okay, this is ridiculous. I'm going to sell short my circle, when it was 150, that's 250. I'm going to sell short this coin, fade this coin move at 300 because this is a ridiculous move. And it's 360 in your face. Shorting rocket ships in this market is a good way to blow out your account. So I'm not even thinking about shorts right now. I'm biased long. I'm directionally betting long, which usually I trade market neutral. I mean, that's maybe where we're long in the tooth here when we got us all just pulled right up here. But I'm prepared to flip at any time. So, you got to be careful here because we are definitely long in the tooth. I just think we're hitting all-time highs. So why am I going to lay out the longs?
Yeah, we mentioned it the pre-market show to the STN room that we're going to have a new segment on the late show, the closing show. It's called "Why the Hell Not," and that's when we're going through stocks to look at that earnings may have a catalyst that has a chart, and someone in the chat mentions the stock, and then it says, "Why the hell not? Why the hell not?" And that is really what this market's been. We're trading at the highs of the pre-market session, 61.57 1/4. I don't have a daily high in the front month rolling contract until you go to February 24th, 61.72 1/4 or 61.72 even. That's only 16 handles away. That's well within the average daily range of the stocks. Quick mention on Hood. If you bought this on the IPO at $85 and you kept averaging down and you said, you know what, I'm going to sell this when it gets back to a new all-time high. You're having that opportunity right now. Hood's trading up $3.50, 85.50. That
why the hell not?
All-time.
S&P no ad. Who cares? S&P no ad.
Oh, man.
Dips. Is AppLovin going to come back? Is AppLovin? Oh, it's starting to come back here. They're going to start. What were the other stocks? All the stocks that did not get out of the S&P. AppLovin. LNG was another one. It's starting to roll its way back up there too. Why the hell not? That's my theme for today. You want to buy some small cap piece of crap? Why the hell not? Stocks are going higher.
Okay, I just think
Good way to end the
before,
show.
but yeah, well, just before we do, I just want to say the content contained in the presentation for informational purposes only. Please,
Informational purposes only. Stock investing is very dangerous, especially for shorts. Consult your
use,
own independent financial advisor before making any trading or investment decisions.
call your broker on your rotary phone, and they will look up the markets on their Quotron, 15-minute delay, and give you the latest price. That's it. Greg Weldon from Weldon Online joining us tomorrow. Greg's a
Nice.
great guest. He covers commodities.
Breaking it in.
Intern. He's a former floor guy, so maybe we'll squeeze a floor story or two out of him, folks.
Nice.
But another fun, exciting day on pre-market prep, folks. We'll be back with you tomorrow morning over to STN Room to tackle this